Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, February the 29th, and happy leap year to everyone. I'm going to take just a brief minute to discuss what markets did last week as we finished the week another positive week in the S&P 500 with that index up 1.66%. The mid caps had another great week as well, up 1.05%, and the laggard for the week were the small caps. They were down 0.7% or down 70 basis points, and this has a lot to do with the small cap index is full of a lot of regional banks, and those were hurt a little bit last week as we got the CPI numbers. And we fast forward to this week, and we get today core CPE, which is the Fed's favorite indicator of inflation, and it's continuing to fall. It's up 0.4 month over month, but it's up 2.8% year over year, below 3%. And you have the Fed funds rate at 5.5%. And this leads us to where investors are at a crossroads right here. You have the investors who want lower rates, and if you have lower rates, what that means is you have a slowing and sluggish economy, and the Fed is going to lower rates to help stimulate that economy. But what we're finding is what we're getting from the economic data is we have a very, very strong economy and one that might actually be accelerating. So we're at a crossroads here of what should we want more over the other? Do we want the rate cuts or do we want the economy to grow and be strong? Well, here's what's encouraging over the last month in the equity markets. We've been talking ad nauseum about the Magnificent Seven for a year. You've heard me speak of those names, how the market was very narrow and it's only being led forward by several names. But over the last month, the market has incredibly broadened out. You have 30 stocks that are at all-time highs that are not tech-related names. They're more representative of the overall U.S. economy and the U.S. consumer as a whole. You look at something, for example, like a Walmart that's at an all-time high as we're talking. It's a very good representation of the average U.S. consumer. It's at an all-time high right now. It's doing great. And the reason why these companies are doing well is their earnings, and they're finally getting rewarded for good earnings growth year over year. And investors are starting to see and reward the companies that have been growing their earnings for the last 2 years, even in the face of, well, the pending recession's coming. So, yeah, you might be doing well today, but we don't quite believe that you're going to continue to do well. Well, investors are piling into these companies that have been showing consistent earnings growth for the last couple of years and are in very, very good locations, are very good prospects for business and have very good prospects moving forward to continue to grow those earnings and revenues. And so another thing I wanted to talk about is you're going to hear people say, well, the market's had a nice run. I can't go anywhere higher from here. This is just a bull or a bear market bounce. And I would tell you that we are seeing from a technical side, there are zero stocks, zero, I'm going to say that, in the S&P 500, zero stocks that are below their 50-day moving average. So that is an indication of a very broad-based, healthy, strong market. When you start to see new 52-week lows in stocks below, I'm sorry, I misspoke. I'm sorry, there's zero stocks at 52-week lows, not at below their moving average. There's zero stocks at new 52-week lows in the S&P 500. That is a huge bull indicator that we have plenty of momentum to ride forward from here. We have a lot of stocks that have not been participating, that have been growing their earnings and been doing well. And you're seeing that in the industrial space. You're seeing that in the biotech space, the material space, and some in financials, believe it or not. You're also seeing it in consumer discretionary. So these are the very economic sensitive centers of the economy that are doing well, and these companies are growing earnings, and now they're finally getting rewarded by investors for these earnings. So as always, if you have questions about how to navigate this time or how do you decipher which companies have those prospects for earnings growth, give us a call. We'd love the opportunity to speak to you. You can reach us at 904-346-3460. Or as always, reach us online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thanks so much for watching.